blockchain and AI is to the evolution of the internet what nuclear energy is to the fight against climate change. Indispensable but widely misunderstood. If it's just an idea, then equity is worth close to zero, because I can promise you, whatever business idea you have, there is a number of other people in the world
I knew
right
you were
now
going to say that. Why am I doing this podcast? You just come do my job for me. This is exactly what I say.
that if you ask for money, you'll get advice. If you ask for advice, you'll get money.
Welcome back, everybody, to the Founders Korner. In today's episode, I have a very special guest all the way from the UK, Eva Dobrzanska, and she is a early stage capital advisor for startups, helping them become more investable. And she actually works with incubators as well. So I'm super excited to bring her on here. Eva, welcome to the channel. How are you doing?
Thank you very much, Seth. Doing really good. And yeah, very
Excellent.
excited to record this one with you.
Good. So Eva, why don't you give us a little background about you, right? Because you and I have talked, and you're like quite intelligent, and I'm very excited for this conversation. So why don't you give us a little background about you?
Yeah, I'd love to think so. I hope so. But yeah, basically, I found myself in the early stage startup space like a good couple of years back, and I actually started out in the non-dilutive side of things, so to say. So I was working for an R&D tax credits consultancy, and then I started working for like an introducer for founders looking to raise capital.
Right.
So I think it was around that time that I realized capital raising is more exciting than the world of tax. And I moved on to
I agree with that.
yes. And that was when I was living back in Sydney. And then I returned back to UK. I set up my own small advisory, helping pre-seed and seed stage founders to basically become more investable, raise capital faster, utilize some of the tools that are available. And then lastly, and earlier this year, I started to work for Block Dojo, which is an early stage incubator that works with startups utilizing blockchain and Web3 technology in their offering.
So very like fresh technology stuff.
Yes, correct. Yeah. And like the way I see blockchain is that I always see blockchain, it is not a standalone industry. It
Yeah.
is just underlying technology that can be applied
Correct.
across there's industries, verticals. There's so many different applications that we've seen even in the last cohort alone.
And it's unfortunate because a lot of people reference blockchain as crypto, right? And crypto has gotten a really bad name. Like with blockchain, I tell people this all the time. You got like smart contracts, you got
Yes.
so many applications that can go into it, but unfortunately, because of the whole crypto thing, it's become a
Absolutely. And it's a big distinction essentially between blockchain and then crypto and Web3 as well. And we've reviewed in the last intake to our incubator program, we've had over 250 applications.
wow.
I've seen some of like fantastic ideas, like absolutely necessary, targeting a very those market gaps that really really need to be addressed. And where blockchain is the absolutely most perfect technology to address the issues.
The only problem I find, and I know we're kind of going off script because I really love talking about blockchain because there's so many like I hesitate to call it misinformation. It's just like people don't do their research, right? And so one of the biggest things about blockchain is that it runs on the world of crypto. Like people only because think of it as millions of computers that are basically your servers, right? And a lot of people don't realize the reason they put their computers up is because they're earning Bitcoin or some sort of crypto.
There's this one quote that I absolutely love, which says that it's been said that blockchain and AI is to the evolution of the internet what nuclear energy is to the fight against climate change. Indispensable, but widely misunderstood.
Yes. Yeah. Oh, yeah. Nuclear energy is very well. Yeah. Couple things went wrong at the beginning, and now everybody is very hesitant on it, right? So I agree with that. So, listen, Eva, it's nice having someone who is in the startup world who helps its startups, right? Because you and I talked about this. There's a lack of resources for them out there
Yeah.
to be able to get, especially funding. What kind of things do you see most people making mistakes as founders at an early stage? Like, what do you see in the pre-seed, basically?
Yeah, so pre-seed, well, some of the biggest mistakes circle around what people put in their pitch decks. And that's important because at the pre-seed level, you are likely to be pre-product, maybe even pre-MVP.
Most of the
So
time, yeah.
yeah. So pitch deck is all you have,
Yep.
basically. You're at an idea stage. So presenting that to potential investors in a way that you can sell it is so crucial.
Mm-hmm.
And one of the main mistakes that I see in pitch decks at this level is that they are just way too long.
Yeah.
Um, I
Oh,
think 50.
always. It gets so technical when they throw like all the technical information. No one cares.
Yeah, if you can't explain your business simply, you're going
Yeah.
to have a hard time raising money.
Correct.
That's how it works. And so too long pitch decks, like more than 15 slides, I think that's too much.
Yeah.
Also too much information on a single slide. That's
Mm-hmm.
actually one of the tips that I always give to founders.
I love
Because
this.
yeah, so human brains process information in phrase.
Yes.
So it is a good idea to stick to 3 key ideas per slide.
I love
Um,
that. Yes.
if you've got that with a pitch deck that is already with a pitch deck that has 10 slides, you already are looking at 3 times 10, 30 things for an
Mm-hmm.
investor to think about.
Yeah.
Um, and these days, attention spans run short. I think an average investor reviews your pitch deck for about 2 minutes and 44 seconds, if I
It's like
remember
a
correctly.
resume. It's like a resume now. Yeah.
Yeah. And like everyone is facing, like brain fatigue, decision making,
Mm-hmm.
like fatigue, information overload. Um, TikTok has done a fantastic job of shortening our attention spans.
Yep.
Um, and that's why it is super, super important for founders to be able to um, distill the entire idea of their company into this super, super brevity high, like core essence.
Yeah. And it's funny because every time we do a workshop, that's like literally my first advice is don't overcomplicate it. Actually, we just did a podcast with another a gentleman from Yaletown Partners in investing, and Arden was like, the famous quote that I use is, "I don't care about your hopes and dreams." So don't
Mhm.
put that on there. Like realistically, it's I'm beholden to my LPs, right? Like my limited partners. So you have to express to me why I should invest in this project and why it's going to be a bigger deal than it is, right?
Yeah.
And you're bang on. It's you need to keep it simple, you need to keep it to the point, and it has to be easy to digest because otherwise, yeah, you're totally right on that.
And then that's actually from one of the podcasts that I was listening to this morning. Another important consideration is that if you are going for funding from VCs,
Mm-hmm.
uh, the VC model the VC model can be quite inefficient in a sense that, like sometimes it is that one unicorn level company that will drive the returns of an entire fund,
Yeah,
which means that VCs are always on the lookout for that unicorn. And
always.
their portfolio is not performing as well as they would like to, let's say in 2023 after the 2021 highs, they will be on the lookout for that one unicorn even more so.
Do
So
you
you
think do you think VCs actually get involved at the pre startup stage though? Like I feel like they're mostly Series A, maybe a late seed, right? Like do you agree with that statement?
So yes, however, I think this is changing, especially in the UK.
Okay.
Um, in the UK, we've got the SCIS scheme, which is a big incentive for early stage micro VC funds to invest as early as pre-seed.
Okay.
Um, yeah. So we actually do get some micro VCs writing checks, like as small as 300K.
Okay.
Um, I spoke with a German-based VC actually just earlier today, and then they write an average 300K checks into pre-seed level startups.
I love
Um,
investing in pre-seeds because if you can actually guide them and help them, like it's actually the most lucrative in my opinion.
which is why so many of the most successful global funds have either an accelerator or incubator arm attached to
Yeah.
them.
Because they have
Like,
to bring in the feed of sales pipeline, right?
yeah, and it honestly, like nowadays and always, I think, it takes a village to raise a startup.
Yeah.
So for
It's a
them
baby.
to,
It's exactly
yeah,
it.
yeah, yeah. So for them to extend that level of support, it is very much in their interest to,
Yeah.
immerse their portfolio in, like that big, I don't know, network of contacts.
Especially when they get to see firsthand what's happening with that startup as it's growing.
Yeah.
They have insider information that they would never have if some random startup just comes to them,
Oh
right?
yeah.
So,
Yeah, yeah, yeah. And I think one of the biggest obstacles in raising funds and fundraising for your startup is literally the information asymmetry
mhm,
between what founders think that the investors are investing in and in what actually their investment mandate is at the
right.
moment.
Yeah, that makes sense. What do you consider, like, if I was a startup and I'm looking for partners? Let's call them partners because that's the reality
Yeah.
of it, right? That is what they are. If I'm looking for partners, what am I looking for in particular from that partner? And two, this is a two-pronged question. What am I looking for a partner? And what is considered a micro fund? Like, what is the
Okay.
value of that micro fund?
Yeah, so I would say micro funds would be the ones that are writing checks of under 1 million
Okay.
into
So, oh, okay.
startup.
So you're considering a micro fund on how much they invest, not necessarily how much money they have.
Well, so depending on like the number of investments that they make. So let's say that we've got a microfund investing like 1 million pounds checks, and
Yep.
they want to invest in 15 startups. They could have basically a 15 million
That's 15.
pound
Yep.
fund. Yeah. And there's quite many of them, like those small funds, like 15 million, 20 million, sometimes
Mm-hmm.
10 million.
Yep.
Sub 50 is generally that
Yeah, I
small.
agree. Okay.
Yeah, yeah, yeah. So that's what I would say. And yeah, as mentioned earlier, in the UK, they are likely to operate within the SCIS bracket.
What
And
does
that
that mean? Just for anyone that doesn't know what that is.
is,
I don't even know what that is, so I'm curious myself.
yeah, yeah, SCIS. So that is Seed Enterprise Investment Scheme, if I
Okay.
remember correctly.
Okay.
Um, Basically, what it is that it is an incentive for UK-based investors to invest in the earlier stages. It means that they can claim back 50% of their investment when they do
Wow.
their tax return. So it's a global
Wow.
incentive. Yeah,
Okay, Canada needs that.
yeah,
That would be huge because the one of the biggest problems that we have, North America, I generalize, but like Canada and US are very different places. I think
Mhm.
Canada is more closely aligned with UK than it is with the States.
Yeah,
But to be frank, a UK does take more risk than Canadians do.
mhm.
But like
Yeah,
Americans, they don't need programs like that because they're like their cash flow is just like so their cycle time is so great that they don't necessarily need investment. Like they don't need reason to invest. They do it anyways. But
yeah, yeah, yeah.
Canadians are so conservative, so
Mm,
conservative.
yeah.
And what the government does is give grants to the startups, which I think is an issue.
Okay.
Whereas they should give grants to, instead of giving the grants to startups, they should be giving those grants to the investors. Because in
The
my
investment.
opinion, investors know how to invest. Startups do not know how to do startup. So you're really
Yeah.
just pouring your money
Right.
down the drain versus a investor. If they're able to take more risk, they can take on those risks for those startups and they can
Yes.
help them in a significant way. Whereas the government, when they give you the money, they're like, okay, have fun, good luck, Godspeed. We'll see what happens, right?
Yeah. Very, very, very much agree. And so the beginning of my career of startups was actually in Sydney in Australia.
Yeah.
And my master's thesis that I was working on was actually the analysis of the entrepreneurial ecosystem in
Yeah.
Australia. So the interesting finding from it is that it is actually more beneficial for Aussie startups to remain small and scale internationally because there is many, many more incentives for small companies in Australia rather than medium or large. Because as they grow bigger
That's
within
funny.
their country borders, the amount of regulation uh, increases and the amount of incentives decreases.
That's why you see so many Australian companies go international before they're
Yeah,
even big in their local. Oh, that makes so much
exactly.
sense.
Yeah,
Oh my God, Eva, you're breaking the like you're breaking the glass for me. I'm getting it. I'm understanding why this is happening.
I love it.
That's
Yeah,
amazing. Okay, cool. All right, that makes a lot of sense now. Because I've always
yeah,
wondered, I'm always like, why are they coming international? Because a
yes.
Canadian company or a US company, they won't go international until they have actually grown significantly internally.
Yeah, like Series B, maybe that
Yeah,
level.
yeah,
Yeah,
but
yeah, yeah.
Aussies don't. That's
Yes, yeah.
oh my
And
God, that's huge.
the investment ecosystem in Sydney and in Australia, because Australia, when you think of it, is literally the East Coast.
Yep.
Sydney,
Like
Melbourne.
the Perth area.
No,
Oh
Perth
no,
is on the
East Coast is Sydney. Sorry. Yeah,
yeah.
yeah.
You got
Backwards.
those three major cities, and then like the rest of the continent is just mostly desert.
Yeah. I mean, the
Continent.
middle is a dark hole.
Yes. And because like when I first moved over there, what was insane to me is that Australia as a continent is literally the size of United States,
Yes,
uh,
it's massive.
but all of the population, which is only like I think 23 million, is concentrated in the major three cities on the East Coast, and
Yeah,
that's it.
yeah.
Um, so the investment ecosystem in terms of investors and VCs is a little bit more narrow as well. So it actually, and it's quite conservative as well.
Hmm.
So a lot of Aussie startups wish to raise funds from US investors, or they wish to expand to Europe and UK and be able to tap into that investment
Interesting.
network here. Um,
Interesting.
yeah.
Okay. That's actually really cool to know. Now, in terms of like what you believe makes a startup or investable, right?
Mhm.
Because ultimately that is what you're advising with them is it's okay, here's the pitch deck, here's what you want to look for. What are you looking for when it comes to investability for a startup? What are the like do you have like a top 5 things you got to hit, or how do you evaluate those?
Yeah. So it's worth noting that those things change depending on the stage that you're at.
Of course, yeah. Let's pretend like they're pre-series A.
Yeah.
So anyone with pre-series A. Of course, you're
Okay.
gonna say market fit. So we'll pretend like that's not one of them.
Okay. Yeah. So yeah. Well, let's start at pre-seed.
Okay.
So at pre-seed, if you don't have a product yet and you don't have like a well built out team, but my advice is to generate traction in terms of potential user interests. So
Okay.
something I always advise for pre-seed founders to do as quickly as possible is to set up a quick landing page where people can sign up to their waitlist.
Yep.
The more people on that waitlist, the bigger the potential valuation they could go for.
Yeah,
Um,
I agree with that. Like I would tell you, no one does that though. Why?
really,
No
yeah,
one does that. I don't know
yeah,
why. Like they don't go and get a product advisory board. They don't go and talk to the customers beforehand. I don't get it. Do you know why they don't do that?
no idea.
All
And
right. So you see
also,
it too, though.
yes, yeah,
Yeah.
yeah, and also building in stealth is something that I never understood, and I don't think I ever will.
And to
Um,
be honest, I get stealth. Like there's two pretenses that you would do stealth. One is you're building a brand new technology,
yeah.
brand new. Like
Mhm,
I get that. And then two, because technically blockchain was in stealth,
mhm,
technically.
yeah.
Um, and then two would be like you have some sort of like leading. I guess it goes to the first one, but leading edge, competitive edge against other people like OpenAI, which was pretty stealth until like Elon Musk and Microsoft started pouring money into it, and no one even knew about it until launch. But I mean, they were pretty stealthy until they got the investment as well. So
Yeah,
I get that, but like most people don't need it. I don't understand it either. I agree with you.
yeah. And like one of the best pieces of advice that I've come across is that actually on those early stages, like you should put 10 to 15 of your most trusted friends into a small private WhatsApp chat so that they can become your early adopters and actually encourage them
Yes.
to give feedback. Um, then having a working prototype and MVP that is generating that interest, this is like the best thing to showcase to investors, and this is actually what will be the basis of your valuation. Because if you
Honestly,
have, yeah,
yeah.
if it's just an idea, then equity is really just a promise,
Yeah.
and if it's just an idea, then equity is worth close to zero, because I can promise you, whatever business idea you have, there is a number of other people in the
I
world
knew
right
you were
now
gonna say that.
that have exactly the same idea.
That's exactly what I say. That's word for word what I say.
It is not about the idea, it's about the execution.
Oh my god, Eva, like perfect. Thank God. Why am I doing this podcast? You just come do my job for me. This is exactly what I say. You know, it's
But
funny. I actually have evidence of that because
yeah,
we do workshops. I go all around the States, Canada, and I do workshops. And I tell people this all the time. I'm like, whatever idea you got, I've heard it in New York, I've heard it in Atlanta, I've heard it in Miami, I've heard it in
yeah.
Seattle. Doesn't matter.
Which is also why one of the biggest red flags to investors, and a mistake that is often made at pre-seed, if you go into an investor meeting and you say we have no competition.
Oh, I hate that. Yes, I hate
Chances
that.
are that investor that you pitch to, chances are they met with your competition last month
100%.
or last
100%.
or yesterday, which is even worse. Yeah.
So what I tell them in my workshops, I always say this to them. I say, look, it's not about the idea. Ideas are cheap. That's my word. That's the phrase I use. Ideas are cheap. Execution is what matters. And then I go
Yes.
back to them and say, tell the investor or explain to the investor why you're going to be able to execute over the others. Don't assume there is no others, but assume there's tons of others, but why you're the guy for the job or the girl for the job.
And yeah, it's really about execution. And when we speak of, getting results, it's about consistency. And there's actually another statistic here that I will probably get it wrong, but
That's okay.
um,
We won't hold
it
you against it.
yeah, it was actually about podcasts, that if you
Mhm.
record 21 podcasts, it will put you like in the top 5% of all podcasters,
I should
because
check that.
because most podcasts do not make it past
I agree. Yeah.
episode
It's
21.
hard.
Uh,
It's hard.
yeah, I think it was from My First Million podcast where I
Yeah.
heard it, actually.
We're at episode 34. So
Anyway, there you go. Yeah.
let's hope.
And no, yeah, because like I see it as well, like consistency over anything else. Because
Correct.
I started posting on my LinkedIn about 2 years ago, and nothing really happened for the longest time ever. The first year was pretty slow, and then in the second year, I think it was basically only half a year ago, maybe, that it started to snowball.
Right.
That I was like generating much more traction and engagement, and then the followers started growing and everything. But like for the longest time ever, it was just about me consistently putting content out there, without getting much, engagement in return.
By the way,
And
YouTubers say this all the time.
yeah,
They're like, your first year is no one's watching, no one cares.
yeah, yeah,
It's like around year 2 that eventually you start kind of growing, and then year 3 maybe you blow up, maybe you're growing consistently. But I hate when people, and I think it's the same thing when it comes to startups. I think a lot of startups believe like when they launch, it's the build the mousetrap and they'll come kind of concept, and you're kind of sitting there going, dude, you're gonna have to work at this. There's a lot of stuff you got to do. It takes 6 months just to figure out who your market is and who you're selling it
yeah,
to and how you're selling it to them,
yeah.
and then it takes another 6 months to just grow enough that you can maybe go for seed, right? But like a lot of people don't realize the average time for these companies that are blown up, and you find out about them blowing up, they've been in it for 10 years.
Yeah. If you're reading about something on the news, you're
Yeah.
too late. It,
And I always say this. I say it takes 10 years to be an overnight success.
oh, yeah, I love that.
That's my
Yeah.
phrasing. It takes
Yeah.
10 years to be an overnight success because no one knows you until about that 10-year mark, and then you're starting to blow up, right?
Mhm.
So,
Yeah.
and I hate that. I hate when I am talking to startups, their expectation is if I don't get it within a year and a half, I'm done. And you're like,
No,
dude,
yeah,
a
and
year and a half,
that's why 90% of startups fail.
you're learning to crawl. You know what I mean? You're trying to run before you've crawled, right? So I love that statement that you just made. I think that's such a thing that I think I want to reiterate in our podcast is that, look, this is going to take grit. It's going to take time. It's going to take patience. It's going to take a lot of problem solving, and there's a lot of valleys, a lot of peaks too. Like there's a lot of energy there, but that's
Yeah.
for sure. What does the current landscape look like in the world of investment to you? Because I think that's the next big thing that I think we should know, right? As
Of course.
startups.
Yeah. So, well, it wouldn't be 2023 if we didn't mention AI. And that's
What's
very,
AI? I don't know what AI is.
yeah. But basically, like, what's interesting to me is that if you think about it, some of like the most iconic companies, they tend to be built in the early years of new tech tailwinds, so to say. So, like in the dot-com boom when the internet was coming about, it gave rise to companies such as Google, Amazon,
Yep.
eBay, Expedia,
Yep.
and Netflix. Then as iPhone came along and we moved from laptop screens to small iPhone screens, that's when we had Uber, Snapchat, Instagram,
Even Facebook.
TikTok,
Facebook went
Facebook.
mobile first.
Yes, yeah, I remember that. Yeah. And then, like now in 2023 and beyond, we've got AI coming into play, and we are in this like early stage of a new technology era, so to say, of
Mm-hmm.
AI. But the next interface change, we went from laptops to mobiles. The next interface change will be probably the Vision Pro headsets.
Mm-hmm.
um
You think
and
so?
I do, yeah,
So
because
I make arguments against this, and here's my argument, and you can tell me I'm wrong. I'm totally okay with this. Um, so before technology, before tech, before what I do today, I used to do home automation. So I had a company called New Automations. It was a home automation company. I went into people's homes and built them theaters, sound systems, whatever, anything you can possibly imagine. And one of the things that we were always consistently battling with is that during that time, 3D TVs were becoming really popular, right? And what was happening was we would sell the TV and we would say it's 3D, and they'd be like, I don't care. And I'll be like, just out of curiosity, like, why do you not care that this is 3D? And they go, I don't want to wear that stupid glasses on my face while I'm watching a movie. You know what I mean? And logical, that makes sense. Like, so I don't know if people want to constantly wear something on their face. That would be my only argument. And that just comes from my experience. So
yeah,
I have no argument against it. I just don't know how. Yeah. Okay. Go ahead. No, the rest is you.
so I no, of course. So everything that you said, I agree to it if we're talking about B2C.
Yes.
But
Okay.
if we're,
Oh, business.
yeah, but if we're talking B2B and like business building space, then like what I think is quite crucial in here is that what underpins those technological shifts is actually the speed with which we can communicate with computers. So, like in the beginning, laptops, you're just typing.
Yep.
When you're coding, you're just typing out your
Yep.
instructions. iPhone introduced a whole new set of haptics and movements that you can do on a
Correct.
touch screen.
Yes.
Um,
Well,
and
yeah, we
AI
move.
is
Yeah.
introducing natural language prompts, which is also revolutionizing how we build businesses, and it's revolutionizing how quickly we can get the ideas from our head onto computers. So how quickly can we build products? If we've got Vision Headsets Pro coming in with commands being dictated with eye movements, I think that is going to be a complete game changer in how fast we
True.
can build. Yeah.
And
So
I think there's a lot of applications in training. Like instead of doing on-site training, you can do real training in a controlled environment where you can actually give really solid training to the new like trade techs, like those kind of I'm with you
yeah.
on that. I agree with you. On a B2B
And
side, there's a
also,
lot of opportunity for sure.
yeah. And do you ever use voice control? Be that on your phone or on your laptop or on your TV?
All right, I'm going to be totally honest about this. When I can't spell something,
Okay.
yeah,
Cool.
I
But
just say it. I'm like, all right, this is the word I'm trying to do. I don't know what to spell,
I
how to
love that.
spell it. I let
But like,
Siri do that.
would you use it to save time or no?
So, um, that's the only biggest, like, I think it's a struggle to remember what the commands are because it's not natural language. It's not
Yeah.
as natural languagey. Um, Second to that is the fact that I do not use
Yeah.
I
Me
don't
neither. And
use
you have to
voice.
speak slowly and so on. Because like, so the speed of how which we can communicate is limited as well. It's limited to the speed of your voice, and it's
Yeah,
limited to how fast the computer is processing it. So like our typing speed is actually much, much, much faster.
yeah, I
Um,
agree.
which is also like super interesting to see. Like it. it's interesting to consider that and think which startups will do well and which startups will do not so well.
Because Google has the aspect of like the voice AI
I
where
think
you
so.
can give it in the instruction of like book me
Never
a
used it.
haircut appointment, but
Yeah,
like
never.
no, because it's like it's just so like that. I don't think people are ready for that yet. That's so obscured right now. It's
Yeah,
just like I don't trust it at all. Like I have to visually see AI do something. I can't just let it go in the background and do it. That freaks me right out. And I'm in
yeah.
tech.
No, I agree. I agree. I think like the whole promise of AI is that it should be speeding up our work, but
Yes.
not doing the work for us.
I that is my number one thesis in the
Yeah.
entire AI world. It should not it and it will eventually replace people because there are some roles that like honestly like there shouldn't people should not be doing that anyways. But
Yeah.
in reality, I think AI is just going to make us more productive. I don't think it's going
Yes.
to take the job away. I think it's just going to make us way smarter because let's be
Yeah.
real, we're humans, we're not able to process data like AI is, right?
Mm.
We're
And
problem solvers.
you know what I think another like big trend is going to be, and that's something that I'm actually pretty bullish on. I'm pretty sure that we might see the comeback of the old school phones where
Yes.
yeah. And like parents are already doing
Razor.
this for their kids. Parents
Yeah.
are already doing this for their kids where they
Yeah.
don't want to give an iPhone to a
No.
kid. So they will give them an old Nokia just to stay in touch with parents. And,
Yeah.
we already see the rise of no phone retreats where people want to
Yeah.
switch off, forget
Yeah.
about the technology and just, like get themselves like out from the world. Cause yeah, brain fatigue is
You
real.
know, you know what?
Um
The kids need to learn that we and how we used to text. Okay.
oh
It
yeah.
wasn't as easy. Okay. T9 that. Let's see what happens.
Like those like indestructible Nokias where you
Yeah.
had to press the
We could
button
drop
like
that all day. There was no warranty requirements for it. It was a brick. You can kill a
yeah.
person with that phone.
Look, one of
Okay.
one of those really interesting metaphors that I came across is that we live in a time where we can be exposed to more ideas and concepts in a
Mhm.
span of a 30-minute long TikTok binge. And that is more than our ancestors would be exposed to throughout the entirety of their lifetimes.
Well, also
And
their lifetimes were like 30-year expectations. So I would be dead by now if we were back then. But yeah, you're right. Yeah, the speed of information has gotten so
yeah.
massive. Um,
Whereas, like our brains as an organs, they're relatively similar to what was, like hundreds of years ago, or thousands of years ago.
yeah,
Like we're still on that level of,
yep,
of the brains, whereas like the technology just like leapfrogged so much.
yeah. Fourth revolution, right? Technology is the fourth revolution. So, what's okay? So AI. Sorry, we did get off track there, but like you think AI is the current landscape. What are you seeing in terms of investability for a startup? Like not
Mhm.
necessarily a product, but like what do you believe investors are currently looking for? Because I think right now the landscape of how investors are making decisions have changed since COVID, because of the capital crunch.
Yes, yeah. Well, the top three for me, I would say, and that's in the order of
Okay.
importance, would be team, traction, and market. You need to have the right team
Yeah.
that is able to generate some traction and addressing a large enough market for VCs to be able to invest. And that links up to what I was saying earlier. VCs need to realize their own returns to their LPs as
Yes.
part of the VC model.
Yep.
So this is why, and if their portfolio is underperforming, this is why they are on the lookout for that one company that will exit as a unicorn and might save all of their funds
Yep.
performance.
Yep.
Um,
They
yeah,
are
so they
always looking for that 1 out of 10.
yes, yeah. So they will be looking for startups addressing large enough markets. Like if you've got a TAM of 1 billion and you are
That's
seeking
small.
to capture 1% of that, that's nothing.
No.
Like nowadays, that's nothing.
Yeah. You might get
So
some VCs interested in that, but it's not going to be the big guys. That's true.
no, and one of the UK-based VCs that I was speaking to, that was a quite interesting insight, is that he said ultimately all UK-based startups must go to the US market and tackle
Every
the
single
US
one.
market,
Yes.
because
Even
that's where the big
Canadians. Yep.
yeah. Like the population of UK is only 65 million.
300
Out of
million
that,
in the States.
yeah, and out of that, the number of entrepreneurs and startups is even smaller. So ultimately, you have to go abroad.
Yeah, no, that makes sense. I agree with the three. I always
Mhm.
say one is timing of the product. So you got to
Yeah,
prove why the timing is good. Team, go to market, product.
yeah,
So it's
yeah.
very in
Yeah.
line with what you just said. I'm in between your two and three, so it's the same concept. What are some of the tips and tricks you can suggest to startups, especially when it comes to like pitch decks or when they're
Mhm.
talking to VCs and angels? What are some tips and tricks you've ever given your advisors as an
Yeah,
advisor?
yeah. So aside from that rule of threes in a pitch deck, something that I always tell founders to do is that when you go into an investor meeting and when you're pitching,
Mm-hmm.
especially over Zoom, you might want to say to that investor, "Oh, please do interrupt me. Please ask me questions throughout," because it will keep them so much more focused
And engaged.
and
Yeah, that's true.
engaged, yeah, rather than having to listen to just your voice for 5 minutes that you're pitching. And I can almost promise you, when that happens, people switch tabs and they do something else in the background. But if you
I
ask them
don't
to
know what you're talking about. There's no way we do that.
but
Shifty
if you
eye.
ask them,
Whoops.
when
Sometimes these
the
startups, like, they're just so boring. Okay, I'm gonna latch on to something with that. You need to bring energy. Like, there's so many of these startups that I get pitched on, and I'm just like, I'm dying in the background. I'm just like,
yeah,
your voice is just so monotone, and like, I want to fall asleep, and I'm no longer listening to you. So I'm with you on that.
yeah,
True.
yeah. So yeah, super important. And like one way to keep engagement is to make it more into a conversation.
Yeah.
um, and then the standard one to be always asking for introductions from every investor that you speak to.
Yeah.
So like at the end of your conversation, or maybe you're at a networking event, and you speak to an investor and you find out in the course of a conversation that they couldn't really invest in you, they're
Right.
later stage or
Yeah.
whatever. Simply ask them, okay, is there anyone in your network that you reckon I should speak to? That way it's not a conversation that's wasted. And I think Harvard Business Review actually did this study where they found that most of the deals that the VCs are doing were referred to them by other
I know.
VCs.
And
Yeah,
they'll always take the referral, always.
yeah.
Whereas a
VCs
cold
speak to
email
each other
call,
all the time. Yeah,
yeah,
yeah. There's
true.
VC networking drinks, there's
Yeah.
VC group chats, there's like VC everything.
And you're
So
right. You should always take the opportunity for uh, some sort of action, right? And yeah, okay, that's totally fine. Like, we're not a fit. That makes total sense. But do you know
yeah,
anyone that what you think I would be a fit with? I like that because I
absolutely.
do agree. I think the other aspect of a startup too is like they're very intimidating when they're talking to VCs, and so
Hmm.
they're very very reserved when they're engaged, right? And you'll see like the confident founders, they're very like, all right, well, like, who else do you know? Like, they'll do what you're
Yeah,
saying. And then
yeah,
you'll
yeah, yeah,
see the ones that are a little more reserved that are like, oh, you don't like my business idea? Oh no. Okay, well, thanks for your time. Have a great day. Bye. Right. So
yeah.
yeah, I think every single one of them needs to do that because cold emailing is hard.
Oh
Getting
yeah.
a meeting with the VC is hard, let alone just letting it kind of die out like that. Yeah.
Yeah. So, one of my really, really good friends, Daniel, who is running a platform called shipshape.vc, um,
Sorry, what is that called? Ship
shipshape.vc.
shape. Okay, I like that
Yeah.
name. All right, cool.
It's basically like a search engine that allows you to put in any keyword and find investors and see what they're posting about, tweeting about, talking about, so
Oh,
that you can
cool.
warmify your investor outreach. It's
Hold on, I
amazing.
need to write this down. What's it called?
Shipshape. I'll send it over
Ship
to you.
shape. Okay, done.
Yeah, and like Daniel's great. He's such a great founder. And one of the pieces of advice when it comes to engaging with investors that he said is that if you ask for money, you'll get advice. If you ask for advice, you'll get money.
I
It,
like
it's
that. I like that a lot.
it's
That's
so good. Yeah,
brilliant.
yeah. And that's basically like the whole premise of you engaging with potential angel investors that could become your strategic advisors as well.
Oh, that's
If you go into
brilliant.
a meeting, yeah, if you go into a meeting with an investor and you are so excited about what you're building that you just keep talking about your startup, and this is what we've done this month, and last month this is what we discovered through our user research, and we did this and we did that, and an investor will come to you and say we want to invest
Yeah, yeah, yeah.
themselves.
Totally.
And that's the goal.
Though it's actually funny you say that because I've never put a word to it, but like my strategy, and it's not a strategy, it's just that like I'm not a sales guy. I'm more
Mhm.
like, how do I provide value in any way I possibly can to you? And it just
Yeah.
naturally becomes a really good relationship. That's what I like. I like relationship selling. And it's kind of funny because whenever we're about to start a startup, right? I go to everybody I know in that industry and I say, hey, do you have a couple minutes? I just want to talk to you about this idea I have. And I just want your opinion. I want your advice. Like,
Yeah.
and I
Yeah.
and I go and I sit down and I'm like, okay, if I was to build something that you're in the industry for, what would that look like? What's the best way to approach it? They'll tell you. And then you say,
Mhm.
okay, if I were to sell it to you, how would I sell it to you? And they'll say, yeah, this is how you would sell it to me. Like, that's a huge value add. Here's how you would do it. They're kind of selling themselves through themselves for you,
Yeah, yeah, yeah.
right?
And then the importance of investor follow-up
Yes.
update. I think it is a stat from Vitalize VC.
Okay.
That they said it is not quite uncommon for them to track a startup for anything between 6 months to a year or even longer before they
Mm-hmm.
invest,
Okay.
because they want to see the progress over time. They want to see
Correct.
the month-on-month growth. They want to see that they are talking to users and then implementing new features and then
Huge.
testing how well those new features are doing.
Yeah.
Um, so yeah,
Huge.
it's about taking them on a journey, and this is why raising capital can take anywhere between 6 to 12 months or even longer.
Yep.
Um, that's how it works,
I
basically.
always say minimum 6, and it could go up from
Yeah,
there. But you're looking at 6 months minimum. I agree with that.
unless you are Elon Musk's cousin and you're like well connected and
Yeah.
so like
That's
all
a
the
different
people.
story.
Yeah.
What are some red flags? I know we're coming up on our time, but I want to know what, okay, so you saw
Yeah.
all the things that you would advise. What are some red flags that you see immediately in a startup?
So yeah, earlier what I mentioned as well, like lack, like if they say that there's no competition,
Oh yeah,
so
that's a
like
huge one.
not enough research competition, then
That
also
seems like you're delusional at that point if you say that,
yeah,
because you
yeah,
realistically
yeah,
you have not done your research. I agree with
yeah.
that. Okay.
And I think one of the biggest things that I would say is trying to do too many things at once at pre-seed and lack of
Oh, okay.
focus. If you've
In
got
terms of product or in terms of like business as a whole, like trying to be
in terms of product, in terms of your target audiences, and in terms of your revenue streams. Too many of any of those is a red flag.
100%.
Um, yeah, if I see a startup that is telling me that like, oh yeah, our target market is like that industry and that industry and that industry, then I'll be like, okay, but like
Yep.
which one do you target first and why?
You got to pick
And
your niche. You got to pick your
yeah,
niche. Yep.
have you started in it or not? Also, in what we say in Block Dojo to our startups is that um, we say in the first, I think it is in the first 3 years, you should have only maximum of 3 revenue streams. Because anything more above that, it will be hard to focus on it, and then also constantly monitor them. So if there is one revenue streams that is only contributing 10% of all of the money coming in, consider getting rid of it, because you're just wasting time on building it
Yep.
out and trying to make it
The
happen
waste of
for
your
not.
resources. Yeah.
Yeah,
I
yeah, yeah,
agree with
yeah.
that.
Yeah, and I've seen so many founders who, you know, to be a founder, you have to be super optimistic, right? And you have to be a risk taker, which
Yep.
means that you will go after so many different opportunities and you want to catch them all.
But
But
you
it
don't have the
can lead,
resources.
yeah, it can lead to lack of focus. It can lead to failed businesses. And I always say that, like in a business, you need like the balance of two. You need the optimistic risk taker,
Hmm.
and you need the careful planner and organizer who will
You need a type A and type B.
Yeah.
personality type. Yeah, I agree with that. Yeah,
Yeah.
you need to be somewhat functional,
Yeah.
where
And the other
operationally you can
balance,
keep focus.
yeah, and usually that balance comes from having a commercial CEO and more reserved CTO.
Yeah,
That's how I usually found. That's how I usually seen those early startups working pretty well together.
CTOs are tough to find though.
Hmm.
Like good
Yeah.
ones at least. So yeah, I agree with you. I think, but I think a lot of people think a CTO has to be a coder, and it doesn't. Like you can
No.
find a
Yeah.
really good product manager. That's a good
Hmm.
CTO because they'll be able to speak the language of both sides, right?
Absolutely.
I
Yeah.
actually
Yeah.
don't
Yeah.
like
Yeah.
tech CTOs because tech CTOs are too techy and not enough
Yeah.
about the product and the customers and what's happening with it. So
And especially if you want your CTO to also be a co-founder, there's like a whole another set of considerations, and and
mhm.
how they will be in pitching to investors, and can they have a full investor meeting without yourself,
Yeah,
um,
yeah,
assuming a CEO.
yeah. Most
Um,
tech people I would not.
yeah,
Mm-mm.
fundraising is like, honestly like a full-time job, so
Yeah,
you will need to split it between the team members.
for sure.
Yeah.
Eva, thank you so much for spending this time. I think
Thank you.
like you taught me stuff today, and I love it. Like that was amazing.
Glad.
I think a lot of startups are going to walk away with this episode going, "Holy crap!" Like that changes perspective, right?
Yeah.
And I think that's going to be huge for them. Now, if anyone's interested in gaining your advisory, like how do they contact you? What's the best way?
Yeah. So LinkedIn is the best way, although I can take a little bit longer to reply because I'm
You're
getting a lot
such a
of
busy
messages.
person on LinkedIn.
Yes. So, but like what I always like say to founders is that like I post a lot of useful guidelines,
Yep,
metrics, strategies, playbooks on my LinkedIn. And then I've also got a Substack newsletter that you can subscribe to from my LinkedIn profile. And
amazing.
this is basically this like stack of knowledge that I am putting out there open source. Individually, I do work with startups on an ad hoc basis. This is quite basically I'm quite selective.
As you should,
But,
because otherwise all the startups are going to come right after you.
but yeah, I can do like I do hold a number of advisory positions, and basically assist with anything that has to do with pitch deck designs,
Okay.
uh,
And
book reviews.
how do they find you on LinkedIn? Is it your full name?
Yeah, just
Okay.
my full name. Yeah.
Because I do my LinkedIn differently, so that's why I was asking that.
No worries. Yeah, no, just my full name, and I'll send you over a link as well.
Yep.
But yeah, I think right now the biggest focus is the newsletter. So I'm always trying to like pack it with lots of useful, resources, guidelines. Like my idea for it is that, as we said earlier, information is inexpensive these
Yeah.
days, and you can find it all online. You can, um,
Time
but
consuming.
yeah, the value proposition that I want to give to founders is that I'll put it all together into a carefully organized stack of the best resources that you need.
We call
Because
that curation. You're curating the information to be more seamless. Yeah, I love that.
I think the value nowadays is not in providing information as much as it is in organizing it. You can
Yep.
find information everywhere, but to be able to find quickly what you need and save time and focus on your business, focus on your fundraising, that's a completely different story.
100%. Our workshops are like that. You can find the information I'm teaching online, but holy crap, you're gonna have to go through a lot. Whereas
Yeah.
my workshop kind of gives you that guideline. It's the organized. I like that. That's really good.
Yeah. Yeah.
Awesome. Eva,
Amazing.
thank you so much for your time. Really appreciate you talking to our potential founders. And I'm super excited. We need to do a catch up though.
Oh my
Because
God. Yeah,
I think
absolutely.
this conversation is not over. I don't think. I think you and I we went on tangents a couple of times, and I was like, "Oh no, I
Yeah.
have to bring it back." But this is so good. So next time we'll kind of do a free reign one version of
Amazing.
this.
Would love that. Yeah.
Awesome,
Yeah.
Eva. Thank you so much, and to everybody at home thanks for listening. And if you like this episode or you think someone would get a lot of value from Eva's knowledge, do share this podcast with them. Otherwise, like and subscribe. And until next time, Corridor out.